I'm an 18-year-old college freshman. I've been looking into investing. I'm going to ask you, what would you recommend in that, certain programs?
Yeah. So I would say this to you, John, that it's really important, and that's great that you're doing that. Congratulations. I know it'll be a good experience for you. I would just say this. First of all, think about savings. And what I mean about savings is very different than investing. So here's what I don't want to happen. I don't want you to take a little bit of money or a lot of money or whatever it is and put it into an investment account and begin to invest it a little bit. And then your, your car needs all 4 tires and it's going to cost you $500, $600, whatever it is. And you're going to have to go to your savings account to get that money, because your savings account is what's going to keep you out of debt. So you go to your savings account. You don't want your savings account to be your investment account, because your investments may be all down then. And you got to go anyway and sell something that's down to get the money for your somewhat of an emergency. You're going to have to get the money to do that. And you're going to have to sell something at a loss, which means you're never going to make that up again. It's gone. You know, it's one thing to have a loss on paper and ride it out through the years, you'll be fine. But it's another thing, once you take it, you're never going to get that back. So, or I'll give you another scenario. 4 years from now, you graduate and you get a job and you've got to move from North Carolina to Virginia for this job. You got to have down payment for an apartment or whatever you got to have, and money. You know, you want to think that's still 4 years is still not long term. That's still kind of the interim there. So you have to be careful about how you invest it, because the thing about young people is they're going to have a lot of life changes that sometimes you don't even realize. You know, you're going to graduate, you're going to get married, you're going to get a job, you might have to move, you might need a car, you might need an apartment, you might want to buy a house, on and on it goes. And you want to have a savings account as well. So if you were going to invest, I would tell you to go to a brokerage account, a TD Ameritrade, a Fidelity.com, open an investment account online. It takes you about 10 minutes. You'll see the different accounts, and you're going to put a little money in there. And I would probably tell you to look at the ETFs. They're kind of like a mutual fund, but they trade in real time. They're a little bit different, a little bit less managed, which is a good thing. And they give you some diversification. So you can put, let's say you're going to put $800 in. You can put $800 into that mutual fund. And every month you can put another $25 in or something like that. And you might want to do that in an IRA, in a Roth IRA account. You know, if it's really an investment account, you're looking at that, you could consider a Roth IRA account and do it in something like that. And I would look at an ETF that the symbol of it is that you would have to enter it in to buy, and wherever you go, Fidelity or wherever, they'll walk you through it, is T as in Thomas, P as in Paul, L like Larry, C like Charlie, TPLC. That's the symbol. That would be the the ETF that I would recommend for you to start out with. And of course, you could do individual stocks and such too if you wanted to. That would be a good way to start.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.